All right, good morning, everyone. It is the 28th of February, 2022, and this is my pre-market strategy session. So here in the past couple of days, boy, did we have one hell of a bounce there. Look at that. This is the SPY. It's the proxy for the S&P 500. And here on the 24th, that was Thursday, this thing opened up. This is after Russia invaded the Ukraine. This thing opened up down here at 411, and in that day, and then on Friday, this thing rallied up 6.53%. This only happens in a bear market. This is still a developing bear market, and there is a tremendous amount of downside possible today. Things are setting up. It's looking like today is probably going to be a rather bearish day. That's why I titled the video, Hold On to Your Butt. It's stacking up for today to be a tremendous down day. And actually, let me go over here and let's look at if you weren't looking at the futures last night, let's take a look at the futures. Here they are. Okay, so and let's take a look at the 10-minute here. So last night, the futures, the E-mini S&P futures here, it opened up, let's see, at the opening there is at 4,299. So, I mean, really, 4,300, right? After a close at 4,380. So it opened up 80 handles off, and then took off to the downside, and the low here was 42.51. So it went from a close on Friday of, let's see, this close was at 43.80, and then it opened up last night, the futures opened up last night, and went to as low as 42.51. So it was off 130 handles. On the SPY, that's 13 points. 13, whole integers, whatever you want to call it. So here we are this morning, still probably looking to backfill a gap, at the open, or at some point I wouldn't be surprised to see the gap get filled, sort of this area right in here, somewhere in this area, 43.53, and then it would fail. That's my guess as far as the activity goes today. It could just fail right out of the gates this morning and not look back. I'm not sure. Things are a bit crazy right now in the markets, and it's not just Russia. This is a quad for a slowdown in GDP and a slowdown in inflation, and the Fed tightening into those economic conditions, and Russia invading Ukraine, with the geopolitical sort of tension between NATO and Russia and China and blah 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 blah. It's just sort of another thing to add to the pile of crap that is our centrally planned economy. Whether we like it or not, the central bank is doing the best it can to plan the economy here. So, and then we've got a whole bunch of Washington bureaucrats who think they know what's best as far as energy policy goes. They're just morons, complete morons. The administration that we have right now, they really, there's always there are a lot of people who say, it couldn't be any worse. Well, it could be worse. I think it was Einstein that said, intelligence has its limits, but stupidity has no bottom. Well, this administration, this Biden administration, has got to be the goddamn stupidest fucking administration I've ever seen in my life. But still, they could be worse. These fucking idiots. Fucking morons. Oh my God, I can't believe how stupid these people are. So, okay. We've got some serious economic conditions coming our way, and an administration that's hell-bent on making it worse than it already is. So whether they, can things be worse? Things can always be worse. So, generally speaking, we're Americans. We still have it pretty good as of right now. A different administration, though, I think would probably do a better job than this administration. That's for damn sure. All right. The VIX is elevated. It's really close to the top end of its risk range. So it'll be interesting. I think it's going to plow through this risk range today and go to the upside. If it dips down in the at the start of the day, I wouldn't be surprised. But I'd be looking for this thing to bottom out. Look, I'm looking for shorting opportunities. I'm not looking for opportunities to trade on the long side. And then Bitcoin's actually held up quite well, although we are still here in this sort of red light zone. So this is the red zone, here's the yellow zone, here's the green zone. And down here, I'm still bearish Bitcoin, although it's done quite a good job. It bounced off of the support level. I put this support level in. Let's see, let's zoom in on this. Yep, there it is right there. So I don't know, it's hard to see probably on a small screen, but there's a dot here and then a dot there, and that's where this support line connects. And then came over here and it validated that it almost touched right here on the 24th of January. So there's some price support right in here in the low 30s. If it goes below that, if it starts breaking down, if Bitcoin starts breaking down below that, the next area of support is going to be in the $20,000 area. And I think that's the way it's going to go. Bitcoin is a risk on, risk off kind of thing, So when liquidity starts drying up, the central bank starts tightening monetary policy, then, liquidity starts drying up, and everything that's a risk asset will see, deflationary pressure. We'll see price pressure. And Bitcoin is no different. And so I suspect, and actually none of these, so far, none of the cryptocurrencies are any different. I imagine there's going to be bottom in there somewhere, but where it is exactly, I don't know. And for the time being, this little bounce right here, this little thing right here is just sort of a period of consolidation, what I think is going to be a period of consolidation in the overall downtrend here. All right, so yeah, that's Bitcoin, that's crypto, that's the SPY, that's the VIX. Here are the Qs. The Qs here aren't really looking a lot better. Let me go to I'll go to risk range plays here, and the Qs are poking its head. They're poking their head up above the as of right now. It's poking its head above the risk range. And I don't think that's going to be long-lived. I think that is going to be a matter of basically today for this thing to fail. Here it is. Here's a good one. Here's a good illustration of it. So here's a peak above and a fail, and I imagine by the time this thing opens that it'll be down below. And so I'll be looking for short setups today. Oh, look, I already had it up. Let's see. Already had it right there to look at. Okay, and let's see then next, Tesla. So Tesla again had a raging, opened up below its risk range here and then piled back up. Now it's working on opening up at roughly the same level that it opened up on Friday. So there's this area right in here in this 800 level. And actually, if I remember correctly, here, let's clean this up a little bit. Let's go back. Let me clean this up a bit and get some of this stuff out of the way. Let's get that out of the way, get that out of the way. I think there's a Fibonacci level right here. At 775, there's a Fibonacci level. 800 was important, roughly 800. I don't remember. I think it's like a closing or an opening price or something that was important. Yeah, it looks actually, let's see. Here on this day, it was a low, wasn't it? Let's see. 801.10. Is it important? Oh no, I bet you it's this one over here. Let's see. 792. Oh, I don't know. I guess, yeah, 792 is kind of important. You know, it did, price action did use that as a reference point there. All right, well, anyway, I'm looking for shorting opportunities. Same thing with Amazon. Here we've got Amazon. Amazon went right back after this really low open on the 24th of February. Yeah, Thursday last week, it just, like everything else, just took off like a rocket. Back to the top end of its range here. Looks like it met some resistance right there at 30.75 and is now kind of pulling down, dropping away from that support or that risk range level. All right, everybody, that is my morning strategy session. So I'm looking for shorting opportunities, looking for short setups. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.